I want to answer the question of, is it better to save up to 20% down and not do 5% down, so that way you can avoid CMHC fees. Some people want to save up 5 to 20 to avoid that fee, and I want to kind of help bring some clarity to that, and if it would be better for you to get to 20, 15, 10, 5%. Sometimes people will say, I want to save up some more down payment. Well, why? If it's to get better terms for your mortgage, a little different than what I'm going to talk about here. I'm just talking about focusing on, is it better to get to 20% so that way you can avoid paying CMHC fees. The CMHC fee is Canadian Mortgage Housing Corporation, and essentially when you do less than 20% down, you're high risk. And what that means is you have to get insurance on your mortgage. Now that is like a fee, and it could be $5,000, $3,000, $15,000, $20,000, $30,000. It just depends on the purchase price of the house that you bought and how much down payment you have, if it's 5, 10, or 15%. The way it works is if you go from 5% up to 15, the fee will drop like quite a bit. So it's better for you because you don't want to pay a fee, obviously. So sometimes people will say, okay, well, I want to get to 20% because if I do, then it's $0 for any purchase price, and then you don't have mortgage insurance. There's no CMHC fee that applies. So I want to just crunch some numbers to help you understand if you should get to 20% or if you already have the 5%, should you buy now? And basically what I did was, if you type in Canadian Mortgage Housing Corporation calculator and you plug in the asking price or the price of the house that you bought, and it'll tell you exactly how much you have to pay in that fee. So I just plugged in $325,000, which is a pretty typical purchase price in Peterborough for a lot of first-time buyers. And if you did 5% down, the fee would be $12,350. If you did 10%, it's $9,068. If you did 5%, it's $7,736. And if you did 20, it's $0. So basically, if you get to 20%, you don't have any fees. Sounds great. The way to look at it though is, are you currently paying rent right now? Because if you are, you're losing money by paying rent, right? So if your rent is $1,300 a month, which is pretty normal, you times that by 12, that's about 15 grand a year you're losing to rent versus owning a house, paying it to your mortgage. When you own a house, there's other costs that you're losing money on, interest to the bank on top of your mortgage, your home insurance, your property taxes, your utilities, your heat, your hydro. That's besides the point. You can't have a perfect situation where you don't have any fees at all or any money lost. But if you're currently renting, losing 15 grand a year, what I would suggest to someone is, if you have 5% down right now and I kind of think of it as like your saving rate. How quick can you save money based on your income and your situation? And for everyone, obviously it's different. So if you can get from 5% to 20% in less than max 2 years, but preferably less than a year, you're probably better off saving the 20%. So if you have 5% of 325 grand, say it's $15,000, and you want to get to 20%, which would be 64,000, and you can get from 15 to 64 in like 10 months, which is pretty unreal, then yeah, I would say save up the 64, wait till you get to 20%, keep paying that rent for the 10 months or however long it takes you to save that money, and then go buy a house. If you can't save it up that quickly, which most people probably are in this boat, then it's probably better that you jump into the market and own a house right now with only 5% down, because the benefits of being a homeowner at 5% down will outweigh the loss of paying rent for 4 more years to get to your 20% to avoid CMHC fees. Hope that kind of makes sense. So it depends on each person, their situation, but basically most likely your situation is the second scenario I just kind of illustrated, which is you're probably better off buying a house right now and avoiding paying rent to just become a homeowner and get in the market than to save up to your 20% down. Unless you can save up in less than a year and you can save up really quickly, then I would say then save up to 20%. Hope that helps.